Welcome to Debt-Free Dreams, where we help you achieve financial independence through smart investing and actionable strategies. Today, we're diving deep into crypto trading strategies, everything from beginner-friendly approaches to advanced tactics that can give you an edge in the market. Whether you're new to crypto or a seasoned trader, this guide will help you navigate the fast-moving world of cryptocurrencies with confidence. Stick around until the end, where I'll share some must-have tools to supercharge your trading and take it to the next level. Links to these tools are in the description below. Part 1. Why you need a crypto trading strategy. Before jumping in, let's address the big question. Why do you need a strategy? The crypto market is volatile and operates 24/7, which can lead to huge profits or devastating losses if you don't have a plan. A strategy gives you consistency, no more emotional, impulsive decisions. Risk management, protect your capital while maximizing gains. Clarity, a clear roadmap for entering and exiting trades. Without a strategy, you're gambling, not investing. Part 2. 7 types of crypto trading strategies. Here are the 7 most effective crypto trading strategies, whether you're a beginner or an advanced trader. 1. HODLing, buy and hold. Best for beginners and long-term investors. HODLing involves buying cryptocurrencies and holding them for an extended period, regardless of short-term volatility. When to use. Ideal for strong, fundamentally sound projects like Bitcoin or Ethereum. Pro tip. Use CoinStats to track your portfolio performance over time. 2. Day trading. Day trading involves buying and selling cryptocurrencies within a single day to capitalize on short-term price movements. Tools you'll need. TradingView for real-time charting and technical analysis. Glassnode for on-chain analytics to assess market sentiment. Key indicators, moving averages, relative strength index, and moving average convergence divergence. 3. Swing trading. Swing traders capitalize on medium-term price movements, holding positions for days or weeks. Best practices. Identify trends and use support and resistance levels to time your entries and exits. Tool to use. TradingView to analyze market trends over a longer time frame. 4. Scalping. Scalping focuses on making small, frequent profits by exploiting minor price gaps. Requirements. A high-speed trading platform. Tools like 3 for automated trading bots and strategies. 5. Arbitrage trading. Arbitrage involves buying crypto on one exchange and selling it on another to take advantage of price differences. Pro tip. Use platforms like Fiverr to outsource custom tools for automated arbitrage trading. 6. Dollar cost averaging. Dollar cost averaging is a beginner-friendly strategy where you invest a fixed amount in a cryptocurrency at regular intervals, regardless of price. Why it works. Reduces the impact of market volatility. 7. Yield farming and staking. Though not technically trading, these strategies involve earning passive income by lending or staking your crypto. Platforms to explore. BlockFi for crypto lending. Zen Ledger and Coinly for tracking and filing taxes on staking rewards. Part 3. Risk management and stop-loss orders. A good strategy isn't just about making profits, it's also about minimizing losses. Here's 4 ways how. 1. Set a stop-loss. Automatically sell your position if the price drops to a predetermined level. 2. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across multiple coins. 3. Position sizing. Only risk 1 to 2% of your total portfolio on any single trade. 4. Using tools like TradingView and Glassnode can help you set informed stop-loss levels and manage risks effectively. Part 4. Tools to master crypto trading. To trade like a pro, you need the right tools. Here are my top recommendations. TradingView, ideal for charting, technical analysis, and monitoring market trends. Glassnode offers on-chain analytics and real-time data to evaluate market sentiment. 3. Automate your trading with bots and preset strategies for scalping, day trading, and more. CoinStats. Manage your crypto portfolio and track real-time performance across multiple exchanges. Zen Ledger and Coinly. Essential for tracking your crypto trades and simplifying tax season. Part 5. For advanced tips for crypto trading success. 1. Follow the market cycle. Crypto markets go through predictable cycles of bull and bear phases. Learn to identify where the market is and adjust your strategy accordingly. 2. Study on-chain data. Platforms like Glassnode let you analyze blockchain data, such as wallet activity and transaction volumes, to make better trading decisions. 3. Use leverage wisely. Many exchanges offer leverage trading, but it comes with increased risk. Only use leverage if you're confident in your strategy and have proper risk management in place. 4. Stay updated. Follow the latest market news and trends to make informed decisions. Platforms like BlockFi and EarnDrop can offer insights into passive income opportunities and upcoming token launches. Now that you're equipped with a variety of crypto trading strategies, it's time to put them into action. Start by setting up your tools. Use TradingView for technical analysis. Track your portfolio with CoinStats. Optimize your tax filings with ZenLedger or Coinly. Links to these tools are in the description below. If you found this video helpful, give it a thumbs up and subscribe to Debt-Free Dreams for more tips on mastering crypto, building wealth, and achieving financial freedom. Comment below and let me know. What's your favorite crypto trading strategy?